Herman Cook, Head of Research at Meyer Bergman since 2017. Originally Dutch, currently based in London. And before joining Meyer Bergman, I was working at Multi Corporation, traditionally one of the main retail commercial developers in the Netherlands, with the European operation. There also I was involved as Head of Research. Meyer Bergman, we are an investment management company. We do manage properties around Europe. We like basically properties where there is a value add component in the assets. Typically you can do an improvement upgrade strategy for a period of about 5 to 7 years. We like very much, let's say, retail properties, particularly those which are oversized. Maybe from a retail point of view, less relevant, etc. But from a real estate point of view, where there is a lot of value in the buildings, unlocked by repositioning, changing, etc., etc. We also like last mile logistics, obviously as explained in the presentation, how the two are interconnected. And I would say the whole strategy comes together, let's say, in urban mixed use propositions, where basically functions are integrated within blocks, even within buildings, where you have horizontal dimensions, vertical dimensions. And those kind of investments, those kind of projects we like to be involved in the core cities, large cities of mainly Western Europe, Northern Europe, a bit of Southern Europe.
Good morning everyone. My name is Irányi. I work with Union Investment and I've been with the company for over 14 years now. I'm heading our Investment Management Europe team number 2, as we call it, which deals with office investments and increasingly residential in all the European markets that are non-German speaking. Union Investment is a company that is a little bit older than 60 years now. We are currently Germany's largest provider of fund solutions in the real estate sector, both for private and institutional investors, managing close to 20 funds now, headquartered in Hamburg with a total staff of around about 450 people, and also offices in other locations such as Manhattan, Singapore, a relatively large office in Paris, and smaller offices in Madrid and Brussels. The main part of our business is to buy core and core plus assets. And the majority of our portfolio consists of offices, although we also have exposure to retail, an increasing hotel portfolio, which makes 80 hotels worldwide out of a total asset base of 400. Increasingly, as mentioned, trying to enter the residential space, but also student housing and logistics.
Great. Oliver.
Yeah, morning, Oliver Kummerfeldt. I'm Schroders dedicated analyst for continental European markets. Most people know Schroders, big asset manager with equities, fixed income products, and so on. But we also do real estate. Got about 18 billion euros under management at the moment across the world. For direct investment, which is mostly continental Europe, where I came into play, it's slightly less. We manage money mostly on behalf of institutions, so pension funds, insurance companies, and that sort of dictates a little bit in what kind of markets we go and what kind of type of risk we want. We're active in almost major asset classes, so office, retail, logistics. We are going into alternatives, and we just acquired just a year ago we acquired a hotel investment company or hotel investor. And we're looking more into alternatives as we go. In the Netherlands, we're active. We just made an acquisition in Amsterdam, finally, because it's a very, very hot market. And we've invested in a couple of logistics opportunities in the Brabant region. But it's a fascinating market, and I think we are very keen to do more in the Netherlands.
Okay, great. And Raphael, you were very generous in your presentation, didn't mention anything about CBRE Global Investors.
I didn't properly introduce myself.
You admirably cracked straight on and did it. But CBRE Global Investors is interesting also because previously, very big presence there because of ING Re.
Correct, yeah, so CBRE Global Investors is CBRE's investment management arm. And we have quite a large presence in the Netherlands with 3 flagship funds. We have a Dutch office fund, Dutch retail fund, and Dutch residential fund. all about ranging from 1 billion to 2 billion in assets under management. So yeah, we have that's still a legacy from when we took over ING Real Estate Investment Management, and actually those are well-performing funds, and we will continue to build on that presence in the Netherlands.
Okay, good, thank you. Herman, let's start with you. I mean, we heard from Raphaël in terms of the economy, and that was also then put within the context of the other European economies. How do you see, I suppose, that economic growth, and how do you see this playing out? You know, where do you think we are in the cycle?
Well, hard to say. Of course, it has two dimensions. I think, first of all, looking to the Dutch economy, of course, fundamentals are strong. Also, in terms of growth, I would say the performance is also strong when we compare it to peer markets. When we look at, let's say, the economic history of the Netherlands, although the Netherlands is a very structured, well-planned country, the economy is a little bit like, riding the waves. Partly because of the dependence of the country traditionally on foreign trade, how other economies are performing, particularly the German economy is performing, although the Dutch economy has been diversifying in more recent times. Partly also because the domestic market consumption is very strongly linked in the Netherlands to, let's say, house price evolutions, affecting basically the opportunities for consumers to borrow money and consumer confidence in general. So obviously, when we look at the economic cycle of the Netherlands and we compare that, for instance, with Belgium or a few other countries, I would say the cycle is pretty strong in the Netherlands in that respect. On the other hand, when we look, of course, at the European economy and we look particularly to the low interest rates, the low inflation, as Raphaël mentioned, we discussed that also earlier this morning, and I think that's a period going to last for some more time. How long, of course, is a big question mark, but it's definitely not going to be over today. So the current market. Is it going to be a decade or 2 decades? Well, if we look at Japan, yes, it should be like decades. I wouldn't want to conclude on that one, but let's look a few years ahead. It's not going to be over. That's, I think, what we more or less agreed on. So I think that's a little bit our view.
I think I would agree with Herman in terms of, and Raphaël in terms of, the growth rates actually look quite good in a European comparison. I think this year we end up with 1.6, 1.5%, next year around the same. Germany 0.5, next year maybe 0.8. Sure, I see that. I mean, I'm getting a little bit more cautious about it in the way that you can see how the sentiment in manufacturing and sort of the trade is rapidly deteriorating, and that's not a good thing. What is holding up the economy at the moment is private consumption, and interest rates and inflation supports that. And you see that in many other countries as well, where you have sort of the sentiment in industry, manufacturing diving, and the question is really, like how much can the service industry hold up in terms of you're not getting sucked into that sort of downward trends. The thing for me with the Netherlands as well is it is a comparably small country, but even within the country, you have sort of these differences between the growth that you can get in a city like Amsterdam, which is still around sort of just over 2% this year, and compared to the rest of the country. So if you're in the right part of the country, I'm not saying Amsterdam is detached from the rest of the country, not at all. But if you focus on these kind of cities and those big markets where you have sort of the tech sector, and Raphaël was showing how the tech sector is driving occupier demand in the economy, then I think you can look at those country level numbers, but if you look at the city level numbers, that's where I get really excited about.
Yeah, I think that's actually a very good point. From an investment perspective, you shouldn't focus too much on the country, but more on the city level. And also maybe to look through the cycle rather than focus on the cycle. I think one of the concerns that I didn't point out was more the the demographic trends that are in general pretty weak in Europe. I think for the Dutch market it's just above average, but still not that strong. But again, at the city level, those demographic trends are much better. And especially in Amsterdam, we see that, actually there's still a lot of migratory pressures, not just from within the Netherlands, but also from outside the Netherlands, which, make it a more diversified economy.
It's a trend we see throughout Europe. Large cities outperforming the national averages and polarization in that sense in terms of economic performance between the core cities and the average country level.
And the Netherlands has a clear advantage.
Exactly.
I mean, people do speak English. I think it's a very open society. Doing business in Amsterdam is fairly straightforward. It's a country that embraces a lot of entrepreneurial enterprise. And there's a reason also why these big tech companies, like Uber and TomTom are in Amsterdam, because it has a high quality of living, language, Schiphol airport, good infrastructure. I mean, good infrastructure is sometimes debated when you sit on the A12 and the traffic is jammed, but nevertheless.
Adam, obviously, German capital in your fund. I suppose, what are you looking for, particularly in the Dutch market, both in terms of sectors? You mentioned really office, but also a little bit of residential, and we've seen in the chart there actually the growth of residential. I suppose, what's your strategy and what's driving you looking at the Dutch market?
Yeah. So I think, first of all, I think it's important to mention that we already have a solid exposure in the Netherlands, especially in Amsterdam on the south axis, where we own quite a significant portfolio that is performing very well. And we are very happy that we managed to finally buy an asset in the traditional city center in the Grachten area with an asset called Five Kaisers, where at the time, and this now loops back into the question with regards to where are we in the cycle. I remember when I supported the transaction internally, there were quite some headwinds, not with regards to the asset. The asset is fantastic. Also, during the marketing process, one of the tenants filed for bankruptcy. And it was a very interesting dynamic because for maybe 5 minutes, people were a little bit like shocked and said, the rental income has broken away. And then immediately we said, okay, there's more upside, okay? Because there is literally, in the grade A area, and please correct me if I'm wrong, there's literally no vacancy, almost no vacancy. It's very, very low. So we are believers in the office market, and this will always be part of our strategy. We have increasingly looked at residential investments. Now I think it's fair to say that this is not something new, that if you look at the Netherlands or at Amsterdam, that you would also look at buying into the residential space. However, it is becoming very, very difficult to get invested simply because of pricing. We just had a situation just a couple of days ago where we participated in a tender process, and we put a lot of energy into that. We analyzed it heavily, and we thought that we submitted a very strong offer, and afterwards we were informed that we were not even invited to the second round, which is interesting. And we are discussing low yield levels. So to answer your question, how do we look at the Netherlands and especially at Amsterdam? I think if you are a long-term real estate investor, be it in the core or core plus area, you need to look at where the young generation is going. Me personally, I live in Berlin. I'm not that young anymore, but not too old, hopefully. And you need to talk to the young people. And therefore, I fully agree with what Raphael said. It's not about countries, it's about markets, it's about locations, and this should have a large impact on your investment strategy. We'll always look at hotels. We have hotels in Amsterdam. We would like to increase that, and I think with regards to shopping centers and retails, which is not my responsibility, we are currently more in a wait and see, monitor position. But would always look at the right opportunities there as well.
Okay, good. And you are young enough, I suspect, Adam, that unlike me, when Raphael mentioned that this time series was going back to the beginning of the century, I was thinking, God, that's going to be a really big chart, all the way back to 1900. But no. There's lots of questions coming in. There's a couple of specific ones that I want to ask, and it may be that Paul, we might have to phone your team and find out, but which is, does the Dutch tax environment still work for offshore domiciled investment vehicles, or will the recently announced tax increases cause yield to widen? And whoever asked that question, that's very good, because that would have been more specific than I would have got to. So, any answers from that?
Well, I think it's a very good question because it's very difficult to answer. I think I would comment as follows. In the current environment globally, where there is a lot of capital, maybe too much capital, hunting the same product, and having adjusted heavily to yield environments in the past 5 to 8 years, I could hardly imagine that tax changes will have an immediate impact on yield levels. I think investors will need to digest the tax changes, will need to analyze the impact on their models, but I think that this will not, in general, put investors off.
It does not impact on the fundamentals, isn't it? Those are sort of tight supply, healthy demand, especially tight supply for grade A office space, for example, changing workplace strategies that companies want to sort of enact and hence sort of reconfigure their space. So, I think you're right, and it's not just I don't think it's a specifically Dutch thing. If you look across the border into Germany, there's lots of discussions about how real estate is taxed. The same thing comes up in places like Sweden, because I think governments are looking at sort of their income, and real estate is a huge part of the economy, and a lot of taxation around real estate has not necessarily been touched in a while. And I think it's not just a unique thing in the Netherlands. That governments are looking on how real estate is taxed.
Yeah, the present system is very old, and I am simply not aware of all the ins and outs of the new proposed system, but it definitely needs an update, so go for it.
Okay, good. I wanted to pick up one thing as well, Raphael. I mean, I think it was probably 5 years ago, maybe even as recently as 4 years ago, that in one of these sessions when we were looking at the Netherlands markets, and I think it was Josh Short, who said that the issue with the Dutch office market is that it's just under demolished. And it's interesting to see how things have changed so dramatically since then or over that time. Does that mean, and this is for anybody, does that mean that those offices were demolished and then new ones have been built, and that actually the market has learned something from that situation? Where are we now?
I think what happened in the office market is two things. Of course, economic recovery, new demand for space. You can see the vacancies going down, new offices being built. On the other hand, when we look particularly to the urban markets, there has been a massive process of transition of office buildings into residential, into hotels. Because while the office market, indeed, as you said, was under demolished, housing shortages in the large cities were abundant, were massive, are still massive, and obviously reconverting offices into residential space was one of the strategies also to work on more like affordable housing and, let's say, a relatively quick increase of the housing stock.
It's also a change in the way the municipalities go on about planning. The city of Amsterdam did realize we have all these surplus office spaces, not helping our economy, it's just sitting around, and we need to develop our city further. And I must admit, actually, I think the city of Amsterdam, together with the surrounding communities and municipalities, is actually rather good when it comes to sort of governance and planning, city development. And I think a lot of cities just realize, there is just surplus office space, it's not helping us. Before it was every municipality wanted to have an office developer come along and build an office building because, it potentially brings jobs and income. But I think the planning regime has changed, and you saw it in Amsterdam, where the city basically said, look, we're putting a cap on, what you can build and what we will issue permits for. I think they're widening it at the moment, because I think it was capped at a certain level, and now they see obviously vacancy rates, as you said, they've fallen from in their 20s to like 5% across the market. And even then, 5% across the market, like you go to the Hachtenrondel or you go to the Schroders, where it's practically zero. It's more in Sloterdijk and those kind of areas, But in terms of the way the city has gone on about sort of managing that kind of planning regime and the supply and going forward, I think it's there has been has been hugely helpful.
Yeah, the regime dates back to the dot-com bubble, when that was the start of the oversupply in the office market. And as Oliver mentioned, they put a cap on new office constructions of around 65,000 square meters per year, which is basically one office building. So, I think at present there's actually not enough development activity going on from a landlord perspective. Of course, it's interesting to see scarcity growing, and you can raise your rents, but more from a holistic view of the competitiveness of Amsterdam versus other European cities, I think it would benefit from more development activity.
Then it was interesting in your slide, actually. I mean, we've already talked a little bit about Rotterdam and what happened there. Utrecht, although it's had the new World Trade Center just opening, there seems to have been a slight tick up in terms of availability, but actually it's still at very low levels. So I don't know, Adam, just from your point of view, when you are looking at the Dutch market, how do you see those cities? And are you sort of agnostic about whether it's Utrecht, whether it's Rotterdam, whether it's The Hague, whether it's Amsterdam?
Yeah, that's a very, very valid question. So what we realized in the past, or in the past cycle, is that we always made good returns for our investors, or we didn't lose any money for our investors as long as we stayed in Amsterdam. That's a fact. Now, obviously, this might be because maybe we bought not at the perfect timing, or maybe the assets were not perfect. But this is just our in-house analysis. This is why we tend to focus on the number one markets. And obviously, one needs to be careful with statements like, maybe this time it's different, but maybe it is different this time, because we've been to Utrecht this year twice already. We looked at the market. We think it absolutely makes sense. It is incredibly close to Amsterdam. To me, it feels like a suburb of Amsterdam. It's not like taking a long trip to a different city.
Lucky I haven't got the mayor of Utrecht here.
But it's there's an interesting dynamic there, and I think what remains to be seen in the mid to long term is whether Utrecht is benefiting to a larger extent from the, let's say, overperformance of Amsterdam. So is it maybe only, it's a strong word, but is it maybe only a spillover effect, or is there enough local demand in the Utrecht market itself? And this is something that needs to be analyzed. Very carefully. But obviously, having been to Utrecht twice this year already and looking at specific investment opportunities, we would always be open to look at secondary markets as well. Probably they're only focusing on the grade A assets and on the best buildings, and not looking at core plus or value add transactions in secondary cities.
Which brings us back to what you mentioned earlier, that we're all chasing the same product, right? I mean, in Amsterdam, we invested in something that is just outside the Schroders, Bergman, and build quality is great, rents are sustainable. So in Amsterdam, you can find arena. I mean, how often have we looked at the opportunities that came in for the arena? Fantastic submarket if you're close to the station. I really like it. But again, the competition is so high, and the yields are getting pushed and pushed and pushed. And then you go to places like Utrecht and you say, well, that's a little bit more of a yield play. But if you don't want to load up on extra risk, right? This is why you stay in the CBD, and this is why we're all chasing the same product.
Utrecht is a very interesting city. If you look from, let's say, domestic market point of view, when you look on the map, it's in the heart of the Dutch road system. It has the main railway station of the Netherlands. And when you look at the domestic economy, on banking, Rabobank, but also infrastructure, the headquarters of the railways, insurance companies, actually Utrecht, from a Dutch economic point of view, I would say is a very, let's say, strong obviously prime city. If you look from a business point of view, headquarters point of view.
I fully agree. I think from an investor's perspective and a potential owner's perspective, the one thing that you need to analyze very carefully is the yield spread in secondary markets, and obviously liquidity over the long term, because it's very when the primary market gets hot, it's very easy to say, well, let's go to city number 2 or 3 because there is a yield spread off.
Yeah.
But the question is, how high is the yield spread? And before the previous crisis, even if we're talking about other markets, we saw significant spreads in yield between market number 1 and market number 2, 3, 4 of 150, 200 basis points. Now, if there is a spillover effect and investors tend to go to secondary markets because they simply cannot invest their money in the location that they are actually targeting, then yield spread comes down. And this is the one thing that you need to analyze very carefully, because at some point, I believe not shortly, and maybe also not in the medium term, but at some point, the markets will adjust. They will not crash, but they will adjust. And then you need to make sure that you didn't buy at the too small premium over market number 1.
Yeah, but in general, just a last point on Utrecht. I think what Utrecht was lacking, it has a very solid local economy, also good demographics, but it was lacking a proper CBD. And Richard had a very nice picture of the new CBD at the beginning of the presentation. And they revitalized the whole central station area, and that has really improved the market in general. But the vacancy that you see is not in those areas, but more in other pockets.
That's an interesting one anyway, because I think the Dutch are quite good when it comes to city planning. You mentioned obviously just, the area around Utrecht Central Station, but you could see in other parts of Amsterdam, the IJ obviously, the banks of the River IJ, which used to be sort of industrial land, not really used, in sort of absolute proximity to the city center, and you can see how, these areas are changing. I mean, many years ago, the Arena district, nobody wanted to go there. It was basically, like a back office, sleepy back office, which was good for data centers, but not a lot more. And you can see how those kind of areas around the city is land that has previously not really been used or has been used in different ways, being regenerated and sort of woven into the fabric of the city.
It's about connectivity. If you look indeed to the Arena station and how these days it's connected to the airport, the frequencies of trains. Also the IJovers, the importance of the new underground line connecting the north and the south of Amsterdam, really putting that area strongly on the map. I mean,
well, this is where, Adam, isn't that where Union invested? Because Herman was saying, the new north-south line is fantastic because crossing, the north of Amsterdam was always an issue to get there. Either the tunnels, which were blocked, or you get on the ferry. Yeah. Anyway, now you have the metro, and I think Union Investment actually bought a...
Yes, correct. We bought it's basically a development site, basically, that we bought. So we now have an in-house dedicated value add and development management team, and it's on North Amsterdam. It's right in front of the entrance to the ferry, and it's a mixed-use development, hotel and residential. That's correct.
I think it's going to be quite successful.
I hope so.
Good. I want to pick up some of the questions that have come in, particularly on this office part. Well, we're still on the office part, which is given strong rental growth in Amsterdam office, could costs become more of an issue for some tenants and drive them out of town or elsewhere? I mean, interesting, particularly because if you're looking to attract particularly the tech, the startup, the innovative side, then rents may be a bit of an issue.
Well, if I just may chip in here, I think obviously yes, cost is a massive factor, but I think you need to put this in the context of the war for talent. If a tech company wants to attract the young, highly skilled, motivated people, they cannot leave the big locations. They just can't, because the people won't join that company. It's as simple as that. The young people want to walk to work or maybe take a scooter. No one wants to ride a bike. Car sharing maybe. They want to have all the amenities downstairs. They want to go to the gym afterwards. They want to go for a drink, and they want to be part of a community. And that's the one thing where I think companies would rather pay even higher rents rather than going into a worse location and risk not being able to attract the talent.
Yeah, I couldn't agree more. The talent is so important for them. Also on a cost base, what they pay on their accommodation isn't material enough.
And put it in a European perspective. I mean, of course, you know, if you're a domestic player and you have domestic offices, that's not of your concern, of course. But put it in an international perspective. I mean, you know, yes, of course, prime rent in Amsterdam is what, 450 now quoted, something around that. Okay, fine. But you know, you go into, you know, you get a little bit to the side and whatnot, and rents are coming down, and you know, I don't think affordability is an issue.
I tend to agree. But when you look at the Dutch market, I think there is also, of course, the aspect of residential prices, rents, and I fully agree with, you know, like IT companies, tech, you know, really the talent will probably still concentrate in the prime locations. On the other hand, what we see happening, particularly startups, creative businesses, other companies, recruiting people in Amsterdam becomes an issue because obviously people have to find housing, which from a shortest point of view is simply not there. So I think part of the growth we are actually seeing, particularly in Rotterdam, I think that is generated by the fact that Amsterdam actually is full, it's expensive, it's hard to find housing. So I can imagine some people are changing their mind. It again is a tendency, also internationally, you see that happening in the US, New York, San Francisco, top priced. You see suddenly former industrial cities becoming cradles for more like creative businesses. In France also, when you compare Paris to some of the secondary cities, actually the growth dynamics in secondary cities are stronger. So in that sense you see that. Plus also in the Netherlands, again from the domestic map of point of view, I mean Eindhoven is a clear example of that. We have a few specialized cities which in a certain extent can work as an alternative to Amsterdam.
I think one of the interesting things about the Amsterdam office market is also the high penetration with flexible office space. And let's not open the WeWork can here, but it's interesting that you have sort of this comparably high penetration. I think, you know, after London, it's probably in Europe the market will maybe London, Paris, and then Amsterdam in terms of the proportion of stock that is flexible office space, because you have these startup cultures, and you know, like it has actually impacted the rental market in the way that if you have small office space, say, you know, below 500 square meters, it's actually quite hard to lease that out. Because companies that would traditionally go for this kind of space, you know, are now in a WeWork. And to the point of Herman about the residential prices, I mean, Amsterdam is crazy, isn't it? You know, you see people, you know, bidding for houses, and as Raphaël pointed out, it's owner occupation, you know, and people just go up and bid higher and higher and higher. And I'm sometimes not sure, you know, how much higher this can go before causing serious troubles. And you can see how people go to Rotterdam, go to Utrecht, because this is the place where you can actually still buy a house. On the other hand, you have this, you pointed it out, Zwolle and Hengelo and whatnot, you know, like where nobody wants to buy the houses anymore, and you know, it's all about the cities again.
Zwolle is almost like Randstad these days. If you look at the housing market, it's amazing what's happening.
Wow. But this is, I mean, this would be actually a question for you guys, like, you know, is this a risk? Is the Dutch housing market overheating? Is that a risk for the economy? I'm not sure, but I see that, you know, the prices are rising very, very sharply.
Yeah, I think it's mainly underbuilt, and
it's underbuilt.
That's something that doesn't seem to change overnight. So yeah, that's an issue.
It's underbuilt. Housing prices are, I would say, mainly defined by the capacity people can loan. That defines the ceiling of the market. When you look to Amsterdam, to my feeling, let's say the housing price rises are topping off, can change again. But what is interesting to see is how the suburban belt, places like Purmerend, Almere, you know, typically places where, you know, if you want to live in the city, you don't want to live there, but how basically housing prices are really accelerating there, and people are looking for alternatives, places to find, to live, to find a decent house, because, you know, for the price of a one-room apartment, basically in those places you can find a house with a garden, family environment. Obviously you can find more objective quality compared to the city.
But I think, Richard, coming back to your question, I think there is a difference between paying rent for a company and having a roof above your head for human beings. Yeah. So I think what is, and I totally agree with you, Herman, is that if you work for a company and you move to Amsterdam and you cannot find an apartment in the area where where you would like to live, you have no choice but to move out. But you have to have a home There's no question. If you are a company, if you want to relocate from Amsterdam to a different city, there is a higher risk involved of losing the talent. And I think that although people want to walk to their offices and buy a scooter and all the things that I've mentioned earlier, I think it is still it's still easier for a private person to say, okay, I will commute to my office and be on the road for half an hour, 45 minutes, I don't know what, but then be in the hip, cool location where I have everything and all the cool surroundings, and that's much easier for a private person than for a company.
No, interesting. I've got a couple of things that I just want to pick up. Which of the big four cities appear most attractive from a value perspective for office and resi investment?
I'd say Utrecht.
Okay. Were you born in Utrecht, Raphaël?
No, just from the spread with Amsterdam. I think what's going on in Utrecht now, what we actually just talked about, that will really benefit Utrecht. On the other hand, I also think there's still pockets of growth in Amsterdam, but they're maybe harder to find if you generalize.
Any other views on that?
No, I agree, and I'm just trying to think of my travel schedule for this year, and I've been to Amsterdam a lot, and I've been to Utrecht, but I've not been to any of the other cities, which kind of speaks for itself. So, Amsterdam and Utrecht, I agree.
Okay, good.
That's okay.
We've got one here, which is also, where do you see the risks at the moment in the market and why? That's for somebody whose glass is very much half empty.
The risk is, in my opinion, is a very sharp economic downturn, and then a situation which suppresses occupier sentiment and hence stalls the economy. I think that's probably the biggest risk at the moment. As I say, I need to look a little bit more into the housing market because I have the feeling, we invest in Sweden as well, and you look at the housing market and the effects it can have on the general economy. And last time we had a downturn in the Netherlands, the housing market did play quite a role. Maybe there is some risk there, but in general, it's not much on the horizon which I can point out to and say this is it. It's not overbuilding, it's not over leverage. Because those are the things that usually break our neck, right? So.
Yeah, maybe just on the investment market liquidity, debt financing is an interesting point to look at. Last year, I believe, we had this sort of void period where so maybe to explain about the lending system in the Dutch market, we have three large domestic high street banks, ABN, ING and Rabo. And then there's a lot of fund-brief lenders active, especially in the prime end of the market. You have insurance companies, and you have match funds or debt funds. So there's a whole variety of debt available. But last year, I believe around this time, the domestic high street banks, two of them, pulled back from the market because they felt they were over-allocated to the Dutch market. And you wouldn't really see that liquidity dries up in the prime segment, but more just outside the prime segment. And we did see a couple of alternative lenders step in, but their loan books are so large, so that will definitely have an impact. And I think that's something to keep in mind.
Let's have a quick look at some of the other sectors. Logistics we mentioned. Here there's an interesting take on that though, which is given the changing nature of logistics demand, have Dutch markets lost position as Europe's biggest or leading markets? And does that have implications for yields? So actually looking at it almost through the other end of the telescope, which is to say, okay, well if e-commerce is growing, does that mean that Rotterdam and its ports are less important, or are things, I guess, like the China Silk Road coming through and ending up in Rotterdam more important? What's your take on the logistics side?
You just bought some logistics, right?
Yeah.
Oh yeah, I mean,
was it a terrible error?
not at all. I mean, Raphaël pointed out it's probably the most mature logistics market in Europe. There's lots of demand, and having the port of Rotterdam and Antwerp on the other side of the border, that creates a region where there will just be demand for logistics. And I think logistics operators are sort of changing their networks in terms of where they want their warehouses to distribute for e-commerce. And in the Netherlands, you have city logistics because you want to get all the cars out of the city center. So I think it's a very dynamic market for logistics, just because there is structural change happening and that actually creates demand. I'm slightly more concerned about a strong increase in speculative development. There seems to be more speculative logistics development coming through. Will this have an impact on, rental growth? Potentially. And in terms of yields, yields are pretty keen for logistics space in the key areas. I mean, the other day there was a deal where something in the market at the moment where it's probably around 4.4% for prime logistics. When you look at Germany, it's 3.9. So you go like, okay. But I think it's an interesting market. There's structural change happening. Logistics companies sort of re-engineering their networks, and that sort of creates a quite lively market.
Yeah, so just to add to that, I agree. I think it's really important to understand what the nature of the logistics operations is. So in the southern corridor from the port of Rotterdam towards Germany, basically, that's mostly for international distribution. And in the wake of all the e-commerce boom, you see an increasing activity for domestic distribution, which is actually more around Utrecht and parts of the Randstad, where you can basically facilitate the entire country within 2 hours. So that's already your last mile logistics from not around the city itself. So important to understand what kind of operations are being done in your building.
The only thing that actually applies to all of logistics, in my opinion, is that we must not forget that I think it's a highly competitive sector, and the margins in logistics, are incredibly tight. And logistics operators, because of the competition, we all say, there's more parcels being sent. Yes, it's economies of scale. But you can go through the accounts of your UPS, your FedEx, your TNT, your Royal Mail, and whatnot. You can see how much competition there is in this market and how tight the margins are. That's why sometimes I'm a little bit sort of hesitant when I look at sort of some rental growth forecasts, which suggests you see 8 or 10% or even more for prime logistics. I'm sometimes a little bit hesitant, but to be seen.
Okay, good. Obviously, Herman, you were involved a lot in retail at Multi, know that Dutch market incredibly well. I was interested to see from Raphael's slides that actually retail was holding up comparatively well in terms of investment volumes over the last 3 years. What's your sense of that? And I mean, it was also interesting to see that e-commerce was beginning to get up to heading towards UK levels, and UK levels have kind of plateaued. So does that mean that the Dutch market is a lot more resilient than, say, the UK market in terms of retail?
Some particularities of the Dutch retail market. Obviously, online growing fast, as the slide of Raphael showed. I think the Dutch market is partly more resilient in the sense that retail development planning in the Netherlands has always been relatively strict. So when you look particularly to the shopping center landscape in the Netherlands, we don't have a lot of, let's say, district, regional, large-scale malls. I would say in that part of the market, typically the neighborhood convenience centers, they tend to be dominant, based on a supermarket, a few shops, maybe a bit of F&B, 1, 2, or even 3 supermarkets, but typically convenience-based shopping centers. What we see with the whole retail disruption is that those centers are relatively resilient, because particularly grocery consumption, let's say, predominantly still goes through the physical store. On the other hand, when you look to the high street retail in the Netherlands, again, the fact that it is relatively well planned, that of course helps the resilience. On the other hand, when we go back a few years and we look at the impact of the recession and the global financial crisis, I would say the number of retailers which were affected by that and the number of administrations and stuff like that has been very strong in terms of department store operators, fashion retail operations. So when you look at the high street retail, partly because of the online, partly because of the market structure, there I would say the retail investment climate is more, let's say, challenging. Secondary locations, mid-sized locations are already under pressure for a few years. But even when we look at prime locations, we see that rent levels cannot hold up. Vacancy rates are increasing. So problems on the one hand. On the other hand, of course, there is a selection of nice historic city center areas in the Netherlands, with also iconic retail buildings where, let's say, repositioning changes can occur. So that probably, still attracts quite a bit of investment capital, but particularly the convenience centers, I think, trade relatively well.
Okay, good. I want to make sure that we've got enough time for questions for couldn't even get that sentence out, could I? Yes, go on. In fact, I can. There we go. Grab that.
May I just ask you, gentlemen, we hear from Schroders an excellent presentation from Oliver about residential being highly expensive. How about PRS? Is the PRS sector highly developed in, let's say, Rotterdam, Amsterdam, Utrecht? Or student housing? Are there now major Netherlands domestic developers looking at the PRS, how developed PRS? What are the best areas in, let's say, Amsterdam, Rotterdam, and Utrecht for PRS and student housing?
Right, PRS, student housing. And we can also just slightly pick up things like senior living if you want to, co-living, those aspects, because that seems to be growing a lot in that area. But let's pick up that.
So the question was, is it overdeveloped? I think it's underdeveloped. Yeah. In general, there's actually a scarcity of the PRS product, especially in the cities. I don't think there's much room in Amsterdam, especially in the historic city centers. UNESCO World Heritage, so you cannot build there, but you can build in the fringe areas. And there's not enough development going on at present, also because they're in a sort of they're squeezing. Land values are rising, and at the same time developers are encouraged to provide affordable housing, which makes your return calculation increasingly difficult. So therefore, some constructions actually do not make it to the market.
It's quite strict, isn't it, when it comes to having to include social housing in your projects, right? Because the regulations state like 30%. It's not like, so it's like in the UK or London, where you can find a way around it, and suddenly you end up with only 10%, and the rest is sort of luxury flats that you. So it's very, it's very strict.
And the thing is, it's also the land use policy is decentralized, so all the municipalities can determine their own zoning regulations, and that makes it really complicated to give you just a general answer to your question. It's different in Amsterdam, it's different in Utrecht. I think the Utrecht municipality is increasingly accommodative for new residential developments in certain locations. In general, Rotterdam and The Hague are more pro-development, but Amsterdam, I only see scarcity growing.
And in terms of student accommodation, you have the big universities in Amsterdam. Utrecht is quite popular, you have Eindhoven, you have Delft, and I think student housing could be quite interesting in those areas. I'm not an expert on that, but what I like about the fact, the Dutch university system attracts a lot of foreign students as well, because a lot of courses are now offered in English, and that attracts people from across the world, especially in countries where you still have very high fees to go to university, like the UK.
Well, actually in Amsterdam there are a few interesting concepts on student housing, like the student hotel, also like Casa, which basically work on the basis that academic year takes about 9 months. So units are there based on the fact of students living there for 9 months, and the remaining 3 months, mainly the summer period, that's operated as a hotel. Concepts are popping up. But obviously, when you look at Dutch newspapers in summertime and you look at, let's say, the main university towns, one of the key topics is always the shortage of housing, lines of students looking for accommodation, campsites being organized on sport fields to make sure that the students are accommodated, let's say, the first month of the academic year. So obviously there is a market there, and what we see in the past, student housing, universities and municipalities, they had a kind of foundation to establish student housing. To my feeling, that's more or less left to the market and market initiatives. So obviously there is a potential, I think, for more.
The thing is with these kind of things, you need expertise in the sector.
Yeah.
That's my opinion. It is quite operational, right? It's almost like, you need to understand the business model. You need to partner up with someone who understands the supply and demand dynamics, who has a track record with banks and whatnot. This is where if you're a pure real estate player, you need that expertise. So I guess the easiest access to this is sort of to partner up with someone who's already in the market, and there are a couple of things.
Exactly.
And we had actually, for anyone who's more interested in that student housing market, and also actually the moving into senior living, co-living, there were a couple of sessions that we did at GmbH. So if you weren't at GmbH and didn't see those, you can also watch those on the website, and there's very good presentations on both of those, which include the Dutch market. So you'll be able to see how some of the dynamics from that unfortunately we don't have time to cover in this. I've got one last question, which is where should these good people invest? If you could only invest somewhere, where would it be and in what? Let's start with you, Raphaël.
I go first? Okay.
Yeah.
So actually I really like, despite the fact that I just mentioned Utrecht, I really like Amsterdam. For that question, there are these areas that are increasingly integrated with the city center, which is basically towards the southeast of the city, which used to be Amstel Business Park. That's rapidly developing. I also really like northern part of Amsterdam, and a bit of a more notorious area for office oversupply is Sloterdijk, but I think there's a lot of things going on there, a lot of residential developments, and it's just next to the Westerpark area, which is a really nice residential area, so I think that will also be increasingly integrated in the city. So those three areas.
Great.
Yeah, for me, I think Amsterdam, and you can look at some of the forecasts that some of the brokers or independent researchers put out there. Still a lot of room for rental growth, in my opinion. And yeah, I think Amsterdam, just because for the fundamentals in terms of an increase in population, solid infrastructure, good governance, and more an industry that is they have big companies, is sort of the diversification of the city economy I like. So yeah, it's Amsterdam, and some of the areas that Raphaël pointed out. I think Sloterdijk still has potential now. It is, it has to be around. For me, it has to be around Sloterdijk station. If you go a little bit too further out, I think it is still sort of quite grim. But yeah, so Amsterdam, and I would look at the CBDs of Utrecht and maybe the CBD of Rotterdam and one or two selected submarkets.
Okay, good, Adam.
Yeah, so I tend to fully agree with Raphaël. So Grachten area in Amsterdam, I would definitely do. I would also continue invest on the south axis, and I think and hope that we will see a little bit more of development and hopefully success in Amsterdam North. To me, it totally makes sense, because if you take the ferry from north to the central station, I think it's like 3 minutes, if I'm not mistaken. So there is a border because of the water, but it is just so close, and there is still room to develop both for residential and offices. So I think that's definitely a location to watch.
And that's interesting, because also if you're there and if people are familiar with that area, it is almost as if that's the back of Amsterdam, and you're looking into it from there. But I agree with you.
Yeah, but what I like about the location is that you kind of have a geographical distance to the city, or you are in the city, but to the city. But I like that because you are kind of in the middle of the city, but you take the ferry for 3 minutes, and then it's already much more quiet. So I really like that area.
Okay, Herman.
Well,
Surely you
a
don't
lot,
do
a lot has already been said. I'm just concluding the queue. But, and I tend to agree. You know, obviously investment opportunities in the Netherlands are plenty. Also looking to the different sectors. Sloterdijk in particular is an interesting case. Also because one of the new planned housing development areas of Amsterdam, in let's say part of the port area, which is to be transformed in the coming decade, is actually located very close there. So the profile of the wider area of Sloterdijk will change, will connect also the area better to the city. I like Utrecht, I like obviously core Amsterdam, but to add something different in the can, maybe, you know, still in the Netherlands, when you look at the neighborhood structures, when you look at the neighborhood center structures, convenience centers, as an investment opportunity, particularly to upgrade those retail centers into like proper centers of the neighborhood based on services, retail, some leisure, you know, catering for a residential population, local, and taking into account also the aging of the population, which is happening in a lot of those neighborhoods.
Okay, great, thank you.